Some ETFs don't just turn the risk knob to max, they rip it clean off and, well, then they set the dashboard on fire. Folks, turn back while you still can because today's ride, it does not come with seatbelts. This, this is going to be, well, a wild one. The ETFs we're highlighting today are dangerous by every definition of the word. We're talking about funds that can drop 15% in a single day. We're actually talking about a good day. Played wrong, they could absolutely wreck your portfolio. Now, you might be thinking, Candace, are you being a little dramatic? Sure, a little. But the danger is very real, and most investors should never go near these ETFs ever. I'm front loading these warnings because honestly, these ones are financial landmines. Enter BetaPro, the adrenaline junkie of the ETF world. These risk taker ETFs are managed by Global X, and they're designed for one thing: extreme market exposure. Whether you want to double down on the Nasdaq, ride the natural gas roller coaster, or bet against the TSX, BetaPro has a leveraged bull or bear ETF with your name on it. These ETFs aren't your typical index huggers. Well, in fact, they're built to magnify daily market moves by 2x or even 3x. That means double or triple the gain if you're right, and double or triple the pain if you're wrong. These ETFs, well, they charge headfirst into volatility. A sub to the channel is the best way to charge headfirst into future content. So, what exactly are bear and bull ETFs? In a nutshell, a bull ETF is designed to go up when the market goes up. It amplifies gains when the underlying index rises. On the other hand, a bear ETF does the exact opposite. It goes up when the market goes down, letting you profit off of a decline. Of course, they are absolutely shorting whatever it is that they're tracking. So throw in that leverage, usually the 2x or 3x, and well, things do get absolutely wild. These ETFs are built to deliver double or triple the daily return of whatever they track. If the NASDAQ jumps 1%, a 2x bull ETF, well, it might jump 2%. But, and this is a big but, if it drops 1%, that same ETF, well, it's going to take a 2% hit. The key word here, though, is daily. They reset every day. Now, that means over time, especially in volatile markets, the performance, well, that performance can drift in some very unexpected directions. Most investors do not understand what that whole daily reset means, and it can have huge implications for sure if you're trying to hold one of these funds longer term. So, this reset means their 2x or 3x exposure only applies to that day's return. It resets daily. And this is one of the main reasons these are not good ETFs for long holds. If the market moves up and down over several days, your ETF's performance can start to drift away from what you'd expect. Even if the index ends up flat over a week, a leveraged ETF might still lose money because of all of the short-term swings. It's quite a weird side effect of the math, and it can really catch people off guard. Leveraged bull and bear ETFs can make sense for short-term trades when you have a strong conviction about where the market is headed over the next day or two. The shorter the time frame, the better. They're built for quick tactical moves, not, and I repeat this, not long-term holding. If you're an experienced trader watching the market closely and you've set clear exit points, and I mean you want a strategy with these guys, they can give you amplified exposure without having to resort to using margin. But for most investors, and I stress this big time, they're like handling fireworks, only safe if you know what you're doing. These are not, and I repeat this, I'm repeating a lot. These are not ETFs to play with. Okay, it is time to take a guided tour through that ETF danger zone. These are the wildest, most unpredictable funds on the Canadian market, and we're about to walk straight into that storm. We have 34 of these ETFs at the time of recording, so a lot of danger to choose from for sure. We will absolutely break these down by investment type. Let's start with commodities, and more specifically, we're going to look at natural gas. On the bull side, we've got the BetaPro Natural Gas Leveraged Daily Bull ETF HNU. This is a 2x leverage on this one. And if you're if you're feeling natural gas is about to go down, on the bear side, we get the BetaPro Natural Gas Inverse Leverage Daily Bear ETF, ticker of HND. And yes, this one also has 2x leverage. Looking to crude oil. On the bull side, we've got the BetaPro Crude Oil Leverage Daily Bull ETF HOU. And this one is also a 2x leverage on it. On the bear side, we have the BetaPro Crude Oil Inverse Leverage Daily Bear ETF. It's HOD. We've heard HOD a lot on the live stream for sure. Okay, what about gold? So, if you're pretty bullish on the gold, we've got the BetaPro Gold Bullion 2X Daily Bull ETF GLDU. So this is, as in the title, it is 2 times leverage. On the bear side, we have the BetaPro Gold Bullion 2X Daily Bear ETF, so GLDD. This one also is 2x leverage. All right, what about silver? We do have silver as well. So if you're bullish on silver, there is the BetaPro Silver 2x Daily Bull ETF, SLVU. Once again, 2x leverage. On the bear side, we get the BetaPro Silver 2x Daily Bear ETF, SLVD. And this is, of course, 2x leverage. Okay, let's take a quick look at cryptocurrencies. So when it comes to cryptocurrency, we don't have any leveraged here, but we do have the BetaPro Inverse Bitcoin ETF. Its ticker is BITI. So it is an inverse tracking of the price of Bitcoin. It does not have leverage, as I mentioned before. So it is simply 1x. You can get this one also pegged to the US dollar. In that case, it's BITI.U. All right. Those are our commodities and crypto. Let's take a look at let's come home for a moment. We're going to look at the TSX. So if you are feeling good on any particular day about the TSX, we have on the bull side, we've got the BetaPro S&P TSX 60 2x Daily Bull ETF. Ticker on that CNDU. And as in the title, once again, we got 2 times leverage on this one. If that TSX is in a downswing, then maybe you're looking at the bear version. So the BetaPro S&P TSX 60 2x Daily Bear ETF, ticker on that one, CNDD. Now, we also have the BetaPro S&P TSX 60 Daily Bear Inverse ETF, CNDI. Now, this is if you feel like the market's going down, but you don't want that leverage. You don't want to take the risk of leverage. So this one has no leverage. It's just simply a 1x inverse ETF. A lot safer for sure. All right, let's switch to some of the US exchanges. We'll look at the S&P 500. So for the bulls, we've got the BetaPro S&P 500 2x Daily Bull ETF, ticker SPXU. So that is, as I mentioned, that's a 2x bull, so 2x leverage on that. But let's say you're really, really keen, and you've got risk. Oh boy, you got risk levels that are up there in orbit. We've got the BetaPro 3x S&P Daily Leveraged Bull Alternative ETF, ticker TSPX. So this uses 3 times leverage. So you want to be careful with this one because, oh boy, that's a lot of leverage, folks. A lot of leverage. I've never used this one personally. It scares me. It absolutely scares me. And let's look on the bear side. On the bear side, we've got the BetaPro S&P 500 2x Daily Bear ETF, ticker of SPXD. So this is 2 times leverage. Of course, tracking the S&P 500 in the opposite direction. It's going up. This is coming down. And if you want to do this without leverage, we do have the BetaPro S&P 500 Daily Inverse ETF, SPXI. So this one does not use leverage. It's simply a 1x inverse. But if you're into your high risk and you really think that market's going down, well, there is the BetaPro 3x S&P daily leveraged bear alternative ETF, ticker SSPX. Oh boy. Be careful, guys. Really, if you don't know what you're doing, don't even touch this one, please. All right, let's take a look at that NASDAQ. On the bull side, we've got the Beta Pro NASDAQ 100 2X Daily Bull ETF, ticker of QQU. So this one is using 2 times leverage to track the NASDAQ. And oh boy, we do have a 3x one as well. We've got that BetaPro 3x NASDAQ 100 daily leveraged bull alternative ETF, ticker of TQQQ. 3 Qs for 3x. Oh boy. Yeah, we certainly, that one could, oh my God, that one could absolutely be incredible if tech is exploding. But I'll tell you, you do not want to leave this one unattended under any circumstances. Looking at the bear, we've got the BetaPro NASDAQ 100 2X Daily Bear ETF. So QQD, there is a US version, pegged to the US dollar, QQD.U, if that is more your flavor. But this one is a 2X, and it is basically, NASDAQ goes up, this one goes down. It does the opposite. Oh boy. If you really want to take those risks, we've got the BetaPro 3X NASDAQ 100 Daily Leveraged Bear Alternative ETF, ticker of SQQQ. That's a lot of Qs. 3 Qs for 3 times the leverage. Oh boy. You want to absolutely be careful. So there you have it. Some of the most aggressive, volatile, and downright dangerous ETFs on the Canadian market. These are not, and I stress this again, these are not built for casual investors or long-term portfolios. They're precision tools meant for very specific short-term strategies, and even then, they carry serious risks. If you are interested in any of these ETFs we looked at today, don't forget to put in a double or triple heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on Daymax ETFs. Thank you for watching, and I will see you in the next video.